All right, welcome back to another episode of the Black Bullion Show. Recently, I put out a video talking about the amount of room silver has to go. I brought up the gold and silver mining ratio of 8-1. And there are other ratios to consider as well in conjunction with, how demand side changes and impacts the price denomination of silver relative to gold. But before we get into all of those different ratios, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit a like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. All right, so Peter Schiff has a new one entitled Silver Breaks Above $28 an Ounce. Now, he obviously focused on the $28 level that silver hit, and we also hit 29. But he puts this into perspective in the following. So I'm going to read this highlight here. The silver to gold ratio has dropped to just over 73-1. The spread has narrowed significantly in the last several weeks, but is still high by historical standards, signaling that silver has more ground to gain. The silver-gold ratio is simply the number of ounces of silver it takes to buy 1 ounce of gold. It has been historically high for months. It was well over 100-1 back in March. The modern average over the last century has been between 40 and 60-1. Here's some historical perspective. Geologists estimate that there are approximately 19 ounces of silver for every ounce of gold in the Earth's crust, with a ratio of approximately 11.2 ounces of silver to each ounce of gold that has ever been mined. Interestingly, the silver-gold ratio in ancient Egypt was 1-1. In 1792, the gold-silver price ratio was fixed by law in the United States at 15-1. France mandated a ratio of 15.5-1 in 1803. Faced with the challenges of a bimetallic monetary system with fixed exchange rates and the aftermath of a worldwide financial crisis, the U.S. Congress passed the Coinage Act of 1873. But I should also mention, guys, before then, the U.S. actually upped the ratio. I believe it was 16-1. There's actually a silver shortage at the time, and then we found more gold internationally in the 1800s. But let's continue. Following the lead of other Western nations, including England, Portugal, Canada, and Germany, this act formally demonetized silver and established a gold standard for the United States. With silver playing a smaller role as a monetary metal, the silver-gold ratio gradually spread. Now, as Schiff puts it here, silver now plays a smaller role as a monetary metal, and because of this, the ratio has widened. But obviously, during times of economic duress, the public gets a quick reminder of silver's monetary role, as we've been seeing in recent weeks. Now, this is on top of the fact that we have newer demands and industrial use cases for silver in this century. Yet, we've already gotten as low as 73-1 in the silver to gold ratio. And we've barely hit our stride, honestly. In fact, take a look at where RBC sees silver going. This is from Kitco, and the rally is projected to continue with silver reaching $30 an ounce and gold $2,100 by year end, writes RBC Wealth Management Managing Director George Jarrow. Now, honestly, guys, I think it'll get higher than that. I don't know when they decided to write this. Kitco obviously put this out on Thursday, but I mean, we're so close to 30. It'll happen soon. It's not going to be until the year end. Now, if they're saying that, hey, we're going to get a pullback, soon, like a major pullback, and then when we climb out of that pullback by the end of the year, we'll have $30, then yeah, I can understand that. Same thing with gold. But if we don't get a major pullback, I mean, I can just see these, I can see these metals going up even higher. Now, RBC seems to think that silver will be at $30 by year end. Where do you guys see silver by year end? Let me know in the comment section below. Let's put our brains together and see if we can figure out a pretty reasonable gauge. All right, guys, thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion.